All right, we're starting to cook with some grease. Feel me? This is video 3. First 2 videos is basically independent videos of this one. This one's a video that combines everybody in one swoop. You feel me? Cool. Now in this video, we're going to be talking about market structure. What is market structure? How to find market structure? How to combine market structure with support and resistance to do what? Find the best possible areas to then place your trades at. Okay? Okay. So first things first, what is market structure? Tripping. Y'all are looking at me right now. You're not supposed to. This is the last time you're going to see me for the video. Vamuski. First things first, what is market structure? In a simple way to put it, it's how price moves. Price is going to always move in a stairs motion, and once you understand that, then you're going to understand basically how to trade. That being said, market structure or conditions of the market pretty much the same. They only have 3. First one's an uptrend. That's when price is making higher highs and higher lows. Second one is a downtrend, is when price is making lower highs and lower lows. And the third one is a ranging market, which is when price is not making no new highs or no new lows. One take, that's all we do. I'm sorry if I fuck up. On the right side, we have examples. Price push up, price come down, price push up higher than this push up. It's a higher high. Price push down, but don't go low than when the previous push up is. It's a higher low. Feel me? Lower high, lower low. This is a downtrend. This is an uptrend. And this is what a range look like. Every chart tells a story, and that story is written through highs and lows. By learning to read those highs and lows, you'll know whether buyers are in control, sellers are in control, or neither side has the advantage. There are only 3 things a market can do. Uptrend, which is where the market creates higher highs and higher lows, where buyers are in control, which is right here. Downtrend, where the market creates lower lows, lower highs, and sellers are in control, which is right here. And ranging, where price isn't making no new highs and no new lows. It moves back and forth between support and resistance. Remember when I drew these here? When you can identify these 3 conditions, you'll stop guessing and understand what the market is doing. Let's combine everything. Imagine the market is making higher highs and higher lows. That's an uptrend. Instead of buying every support level, focus on the higher lows. These right here. Those are the support zones that fit the current direction of the market. Now imagine the market is making lower highs and lower lows. That's a downtrend. Instead of buying at support, look for lower highs. Understand? Those are the resistance areas where sellers have already shown strength. Market structure acts like a filter. Support and resistance shows you where price might react. Market structure is going to help you decide which of those reactions fit the market's current direction. Okay? Perfect. Now, before taking any trade, I want you to ask yourself these 3 questions. Let's go ahead and remove everything. The 3 questions is this. These right here are the 3 main questions you should be asking yourself before you place a trade. If you can't answer any of these 3 questions, you should not be placing the trade. You feel me? Now let's go ahead and give some examples. So, click, nigga. Testing, 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 testing. All right. For our examples, we have 2 boxes that we must read. We're going to go market structure first, support and resistance second. Okay. To find market structure, you need to understand how price is moving. Once you understand higher highs, higher lows, lower highs, and lower lows, you can determine that you understand where price is headed. To start finding structure, look for the aggressive push in the market and then look for higher highs, higher lows in an uptrend or lower lows and lower highs in a downtrend. So we have the support resistance examples. Let's use this right here on the 1 hour. All right. You know our favorite tool is the path tool. He said, start aggressive push. Okay. Previous to that, we have this right here. So we can go, it went lower, uh, 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 right? Now, realistically, we will expect this to come back to here or to these lows. You feel me? What did it do? It chopped back and forth, but what did it do? Came back. Feel me? Why? Look, it broke this low, understandable. It stayed around it. It didn't break this low. Okay? We needed to break this low to continue to this low. Right? So this would be telling us we should keep going up. Right? Let's continue. Uh, uh, we should be aiming for these highs. You're looking for the stairs motion so you can determine where to get in for a trade. All right, we're going to stop right here. In order for this to be considered an uptrend, these highs would have had to been broken. Right? Based on what I told you previously in the video, you got push up, which is a high, came down, didn't break the low, higher low. Okay, broke past the high. This is a new high. This is a higher high. This is a lower high. This is not a lower low. It's another higher low. So the beginning of an uptrend, where would you want to look for trades? In these areas, right? Did it come in this area? Did it come in this area? No. It pushed up. Your next opportunity is up here, right? It looks ugly. Okay. No. Cool. Your next opportunity is here. Did it come in that area? No. Close, but no. You could still take it. But like I said, you want to follow the rules to the T? No. We pushed up. Break a structure. We broke these highs to make new highs. Boom. Feel me? These, when you come into here, market structure is going to tell you where price wants to go. If you found support down here and price started to push up and do all of this, of course you could have found a trade in here and rode it to these highs. You understand? This would have been your ideal trade right there. And then rode it to these highs, just following market structure. Cool. Now, this is uptrend, ideal uptrend, market structure shift. We were coming down. If we want to show you what the down look like, where my tulip is. Down, up. Do you guys see the stairs motion and all of this? That's what I want you guys to understand. You're going to get this motion in the market all the time. That's what you want to look for in a trending up market. You're going to get this motion going down in a trending down market. You want to understand where to position yourself. You feel me? Once you understand where to position yourself, you can then understand where to place the trades. Once you can start to see the different structures of the market, you begin to see what price is doing. Understandable? Okay. Now, once all of that is said and done, it should be a lot easier for you to find the market structure. I draw it out with the path tool so I can always understand what I'm looking for. Now, when you understand support, resistance, and market structure, you will begin to understand that market structure is a filter. You feel me? It's going to let you know what side of the market you should be trading on. So when we come here and we see price drop, come up, drop, wiggle, 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 drop, 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 come back up, come back up, come back up, come down, come back up, come down, come. We just came from a selling structure, right? Look at this. I just drew the market. Boom. This is probably a longer wick that I don't care about, but look at this area, right? You can bring this down here, but look how even just drawing it out helps you understand what you're looking at. You'll begin to see that we haven't got past this low to basically signify we should start buying, right? Whenever the structure changes, that's why you need to have these boxes to remind you what it is. Whenever structure changes is whenever price decides to close and bounce off your box and make it exist. Until then, structure should filter your trades. Like, no matter which way you put it. You can always tell where you want to place your trade from. Understand? By just using the boxes. So I hope that made life a lot more easier for you guys. All right, when it comes to examples, there are no official ways to finding support and resistance. Every way you see is subjective to the person that's showing you. Follow these main rules when finding support and resistance. 1, you want to look for multiple rejections. 2, look for multiple rejections or wicks in one area. 3, look for volatility moving away from the area, big candles moving opposite. 4, smaller candles form when approaching zones. So look, we got some examples over here. As we're coming down, bang, bang, small, 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 rejection. You feel me? Come again, big, push up, small, 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 wiggle, wiggle, rejection, super fly. Come back, bounce, small, 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 drop, small, 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 bang. You feel me? Resistance, same thing. We drop in, you see as we come up, small, 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 multiple wicks, bang. Same thing. We gap up, a small, 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 a little push above, bang, bang. Okay? More resistance. Look, small, while we're around here, it's small. Everything is tiny. When we get into an area, we've done moving up, shoot down. Come back, barcodes, barcodes, shoot down. You feel me? That's what you want to see when it comes to resistance and supports. Do I have one more? Boom. So look, this is a combination. You feel me? Price came over here, shot down, wiggled, barcode, no movement. You would have thought it smacked down, right? Nah, it came and shot up. But now we know this was a combination. It stopped here. You could have put something right here, right? But when we shot up, we came through it, we hit this again, came down, and what do we do? Wiggle in this area, shoot down. Came up, we ain't even touched this, shoot down. Support. Look what happens when we got close to it. Wiggle, wiggle. And this wiggled up because it's between two. So this was technically a ranging market, but you could have still ate on this. But look, came up, shoot down, wiggle, wiggle, wiggle until eventually, bang. So what you want to look for, everybody who looks for support and resistances, it's subjective to whoever you're looking at or whoever is showing you. But the main key takeaways that you want to do for everything is that when you go, you look for multiple rejections. This is what I mean in multiple rejections. If you need help finding them, anything that looked like a bunch of W's together, look, down, up, down, up, down, up, down, up, down, up. Multiple rejections. Down, up, down, up, down, up, down, up, down, up, down, up. Multiple rejections. You feel me? That's what you're looking for when it comes to support. And I can keep going, of course. But anything that looks like this, when you use your line chart on it, you can easily see that it's forming an area and it's saying, I don't want to go lower. That's all it's saying. You feel me? So with that being said, thank you for watching the video. Y'all have a nice day.